November 11th, stock playbook. Okay, we had a good day in the markets. We're going to look at all three indexes because the one thing I want to point your attention to is the volume. Okay, when I say light, it's an understatement. Okay, the lightest day since July 4th weekend, and it was lighter than that. It was the lightest day we've seen since Memorial Day, the Friday before Memorial Day weekend. Ridiculously light volume. Dow Jones up 259 points, 2.2%, back at the upper end of the range, but light volume. Like we said the other day, I think until proven differently, we're in a trading range, and this stock's at the upper end of the range, which, I'm just sharing you my opinion. If you're bullish, great. Hope for a breakout. I hope this thing goes high. We can all make a lot of money, but I'm leaning towards the short side. Okay, everything is not hunky-dory in Europe. The problems didn't just disappear. 2 days ago, we were worried about another financial calamity that was going to take the whole U.S. banking system down. And today, everybody thinks that the all clear has been signed because we have a new prime minister in Greece and one coming shortly in Italy. It's ridiculous. Yes, the guys that are bringing in are a change, which means there's a better chance we get something done, but it is not a foregone conclusion that this mess is going to just vanish and disappear. So please, I'm not saying don't participate in this rally. Just understand that there's no real buying behind this. It will come, like I said when we had this rally, we'll get some people chasing performance into year end because most of the mutual funds and hedge funds that I'm aware of are behind for the year. Even though the indexes are roughly flat for the year, it's been a really difficult time this year. So Dow Jones, I said my piece. NASDAQ, same exact chart. Right at the in the middle of the range. It didn't participate yesterday because of Apple's weakness, so might have a little more upside, but no volume to the upside. S&P 500, the index we follow the most, up 24 points, just shy of 2%, 1.9%, coming up on a 200-day moving average. Again, volume non-existent. So what do? You could short, you could buy, you could do whatever you'd like to do. But you just got to realize, just keep in mind that if you get in long stocks, you got to have tight stops in place. You got to be willing to admit defeat. We gave you some names that we like. Google is one that we said if you're a bull, you can get long Google. If you're a bear, you could short Google. It's going to go with the market. So if you're bearish, you could look at short in Google with a real tight stop and a move above, this 615 area. You're risking 1% to the downside to hopefully catch $50 or $60 to the downside or upside if this thing sells off. Buffalo Wild Wings had a beautiful pullback. You got to exercise patience. We didn't say buy it at 67. We talked about it back here before when it was in the 40s. But most recently, let it pull back. It did so last time we started talking about it again. Buffalo Wild Wings, nice little bounce. You could throw Panera Bread, which just recently we had as an earnings play, had a beautiful quarter. Look at the tight consolidation in this area. Mind you how crazy the market's been. This stock's held on to most of those gains and now getting ready, looks like it's ready to hit new 52-week highs. So Panera Bread, Caterpillar. It's not often I talk about these names, but we're at that point where if you're going to start dabbling in a market like this, you might want to lean towards the larger companies, only because if we get the rug pulled out from under us, there's a good chance these don't drop as quick, as much as some of the smaller cap stocks. I like the smaller stocks better. They're going to give you a better return if the market goes higher, but I'm not convinced yet, so that's why I'm giving you these names. Caterpillar. We mentioned Halliburton, Enjoy Global, which worked out nice. Starbucks. I got some emails today, people picking Green Mountain coffee roasters after the sell-off, trying to pick a bottom. Don't do it. It had a huge gap down. You want to get a coffee thing? Look at Starbucks. Again, I'm not saying buy any of these. All right, I'm clearly saying we're at the top of the range. I am leaning towards the short side. But there are plenty of names that are working, and we share them with you. I'm not saying you should be 100% cash. You could invest in stocks. Stocks like SolarWinds, which we talked about, when it started breaking out. We love SolarWinds. This is directed to everybody, but Joe in particular. Joe sent me an email telling me he's up 20%, wants to know if he should take profits. IBD says if you get stock goes up 20%, you should hold it 6 weeks. If you're in a good market, yes, but if this market rolls over, you'll give that 20% right back. So just be aware of that. Don't let this turn into a loser. I'm not saying it will. All I'm saying is there's options out there. Options, not options, options with options. All right, you could take your book your profit, take your 20-something%, take a small percentage of that, and buy the $30 calls for $1.60 or $1.70, whatever it is, going out to December. So you could still participate in the upside, and if the market rolls over, your maximum is $1.60 or whatever you paid for the options. Or you could go ahead and buy some puts, hold on to the stock, but buy some puts. Maybe you take a look at the $30 puts, which expire next week as an insurance policy. So yes, you're forfeiting some of your gains because you're spending money to insure yourself, but that's another idea. As far as selling it, I like holding my winners, okay? But when in doubt, sell a little bit of it. You got 1,000 shares, you made 20%, sell 500 of them up here. If it pulls back and falls under 29, you sell another 500, and then put the rest as a stop loss somewhere around or just above your entry level. I hope that helps people understand how I would manage the account. Ubiquity Networks, I said it often, it's going to be on our focus list stock in the IPOs. They came out with revenues, earnings, 132% revenue growth, 167% earnings growth. Stock looks like it was ready to hit new highs today, got right up to it to the penny, 21.50, and then reversed, closed at the lower end of the range. Not the best action. Maybe it's not ready to break out yet, but this is certainly one you should have on your radar, and it will be on the focus list soon. I own Ubiquity Networks in the hedge fund, UBNT. I've shared that with you in the past. Couple other companies that we've discussed in here that came out with earnings. We didn't have them as earnings plays, but C&J Energy Services. They provide hydraulic fracturing and coiled tubing services on complex well completion in Texas, Louisiana, Oklahoma. Phenomenal revenue growth, phenomenal earnings growth, triple-digit earnings and revenue growth for as far as I could see. Going forward, same thing. IPO'd at 29, as you can see, has been a failure of an IPO, but this is one we've talked about since it came public. We've liked it. We said you just got to let it come to you and let it show us something. Well, guess what? Starting to show us something. This thing's been in a downtrend for some time. Recently emerged from that downtrend, recaptured the 50-day moving average, heavy volume to the upside. William O'Neill and IBD will say let it continue building the right side of its base, let it get up to 30, develop a handle, and then when it breaks out, you buy it. I say why wait? If you could be disciplined, you get in now, you use a close below the 50-day moving average, or you take on a little more risk. There's more likely to be the base will fail, but you could be up 50% in this position before it gets to the level that William O'Neill will look at. William O'Neill's my idol. He is, in my opinion, one of the greatest investors of all time. I just differ from him. Not because I'm smarter. I'm not. I personally am willing to take more risk to get greater reward. That's what makes my approach a little different than his. I get emails all the time. William O'Neill wouldn't buy it. William O'Neill says wait. So I hope that explains why. But C&J Energy Services, I nibbled. I got a placeholder in it today. I'd like to see it come down towards the 19.5 level, and I'll complete my position and then put a close under 19 as my stop. But CJES is one I bought some in the hedge fund today. SREV, Service Source International. Service revenue management software and services in healthcare and tech industries. Had a great quarter. Gapped up, got above its 50-day moving average. Again, IPO, very successful. Then it rolled over, started, selling off. Stock's been in a downtrend for some time. You connect these tops, you can make a case for the thing just this week, breaking out above that downtrend, heavy volume. This is what I call alternative buy point number one. Let it move up. If it pulls back towards the 50-day, that could be alternative buy point number two. If it takes out the 1550 level, or 1850 level, those could be alternative buy points 3 and 4. All of which are much cheaper than waiting for this thing to build a base and then get long. I like Service Source International. It's a name we've talked about often. Accretive Health, AH, we've talked about often. Earnings pulled back, holding the 200-day. We like Accretive Health. Keep an eye on that. Polypore, chemical play, plastics, specialty chemicals, polymer-based membranes. getting up to the 50-day moving average. They had a great revenue number, great earnings, great projections going forward. This stock is a $2.5 billion company, but Polypore is one to keep an eye on. Liquidity Services, we mentioned last night. We like it into earnings. Haven't confirmed them yet, but Liquidity Service had a nice little day. Select Comfort, we haven't mentioned it in the last few weeks, but it doesn't mean we've forgotten about it. We had them as an earnings play, a successful earnings play that made us multiples on our money, depending on which earnings you bought. If you have those Novembers, or the Octobers, if you took your money in October, great. If you have the Novembers, you might entertain exercising. This is a very bullish looking pattern. Bed mattress stores holding this gap up in this tough market. This is one that looks like it might have some more left in the tank. Allot Communication, ALLT, gap back down after Kramer's pop came in, gave you a great opportunity to get long at 14. Now it's 16, but we like a lot. Tango, TNGO, is one that just had revenues and earnings that I liked. This is one on a little bit of a weakness from here. You can get long. Zoll Medical had a good earnings report 2-3 days ago. Stock, didn't do much, but today had good data out of North Carolina, Medicaid as far as reimbursement, cardiac resuscitation products for the treatment of sudden cardiac arrest by professionals. Heavy volume. It's the volume that I like. The heavy volume. Closed in the lower half of the range, met with some resistance at that 41 level, but now it's back towards the lower end of the range. You draw a line, that's your support. If it falls through that level, you get out. Otherwise, you're looking at short opportunities. You know them all. I'm not going to spend any time on the shorts. When you get these pops. I wouldn't short Win here. It was a good short again. We had it nailed cold here. It sold off. When it ran back up into the 250 day, it was a great opportunity to short again. You got yourself another 25-point drop. It ran up into resistance again, and most recently another drop. I still think Win goes lower if the market rolls over, but if it doesn't, if this thing rallies up to 135, 140 level, great opportunity to get short and use the 142.5 level as your stop loss. I got 4 other names before we get to the earnings plays. IMPV, okay, Imperva develops market services and supports data security solutions with data center. Good, solid revenue growth, not earning any money. IPO, very successful one at that. They priced it at 20. I'm not going to chase it, but IMPV, very much like Fusion IO. When it first came out, I loved it. I said, we should chase at Fusion IO, but we bought more on the pullback. Trade around it. But IMPV is one we will be talking about, so I just wanted to make you aware of it. Okay? Not yet, but on a pullback at $20 a share, I would certainly buy some. 22, I might nibble, but IMPV. TLLP. We've mentioned this company once or twice. You could search. IPO'd at 21. It's been in a tight trading range between 22 and 26, moving out. Major limited partnership. It's not my cup of tea. I said it then, and I will say it again now. All right, but you're looking at this stock here. Mutual funds own 67%. You got a 5% yield. Again, if you're looking for yield, Tesoro Logistics, oil and gas, transportation and pipeline, the Bakken Shale and the Williston Basin, moving up, hitting new highs. I'd want to see a pullback towards the 25.5, 26, but TLLP is a new name for you guys also. I'd rather be, to have exposure to oil and gas, I'd rather be in Gulfport Energy. U.S. exploration and production, nice base being formed here. You can make a case for a double bottom base here, which is already broken out when it got above the 31 level, or just a double bottom base adding a handle. But GPOR is one I'd rather see in. And look at some companies. They sound boring, but they're working. Myers Industry. We shared this with you when it hit a new high a few weeks ago, and then it pulled back. Gave you a great entry level when it pulled back to 20-day moving average at 11 and change. Now 13 and change, new high. But Myers Industry, they manufacture the reusable plastic containers and horticulture pots, trays, planters for ag markets. Good solid earnings projections going forward. Institutions are getting long this stock. Myers Industry is a new name that can have some legs. Outside of that, I think it's traders market. We had a couple of winners. They weren't nothing really big. We had one loser, but Body Central, Gap and Go had a good earnings report. Nvidia, I thought it was going to do a lot better, but it was up. Nobody should have lost any money on Nvidia as an earnings play. Molly Corp, not so much. Molly Corp, that's why we buy options, because you don't want to go ahead and get stuck in this kind of sell-off. Molly Corp, if you bought the upside calls, you're losing all your money. Bourne didn't do much either. Didn't make money, didn't lose any money. ZAG is coming Monday. Got above its 200-day. Velty, VELT, coming Tuesday. Those are the next two earnings plays that I like. Salesforce.com. As I said, I think Salesforce.com is poised for... it can go either way. Let me preface that, but I'm playing it to the downside. I think Salesforce.com really needs to kill it for there to be some heavy interest at these levels. So I'm betting on a non-kill and a sell-off on Salesforce.com from a trading standpoint. Listen to the new high videos. We got new names in there. Names like Pizza Inn, which we've talked about in here too, when it was at $4 a share, $4.50. Now at $6. There's stuff in those other videos too. Scan them real quick and see what we got. That's it for the playbook for tonight, for this week. Have a good night. Have a good weekend. Stay nimble. Stay small. This is not a market where you should be using margin and getting long thinking that, the bulls are going to start running. We got issues right here with this super committee trying to find $1 trillion to cut. They're nowhere near an agreement. So, while we're focusing on Europe, we're a week and a half, 2 weeks away from focusing on ourselves and our inability of our elected leaders to do the right thing here too. So we don't know what kind of pressure that's going to put on the market. All right. Have a good weekend. I'll talk to you Monday.